Today on the CEO Barbecue, we're looking for silver all across North America, actually, but predominantly in Alaska, together with Silver47. If you want a bullet point summary of this conversation and all the other CEO barbecues in your inbox once a week, go to resourcetalks.com and subscribe to our free newsletter. Now, the company you're about to hear from has paid us for the production of this video, which means that this is not research, it's an advertisement, and you should treat it as such. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. And please only watch this if you absolutely know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, and my business sells content-producing services, which also makes me biased in multiple ways. So before continuing on, please talk to an independent investment advisor with a good long-term track record because your capital might be at risk. If you're not 100% sure you understand 100% of the disclaimers I just showed you, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Silver47 is listed as AGA or AGA on the TSX Ventures Exchange, where over the last 3 months, the average volume has been about 140,000 shares. The stock's 52-week high is 98 cents and its 52-week low is 46 cents. Now, this is where I normally tell you the rest of the trading details as well as the financials of the company, but there's two caveats that I'll have to make. And one of them is that Gary and I already did an in-depth CEO barbecue about 3 months ago, and I'll link that in the description for those of you who haven't watched it to go ahead and do that. But also Silver47 is currently potentially going through a merger with Summa Silver. So the trading details and the financials might be subject to change if this proposed merger was to close. But the pro forma or expected capital structure would have 138 million shares outstanding, which at today's 86-cent price would be just under $120 million in market cap. The new company will be owned for 56% by today's Silver47 shareholders and for 44% by today's Summa Silver shareholders. On top of the 138 million shares outstanding, there are 46 million warrants and options and RSUs and everything combined into the dilutive securities, which means that the fully diluted market cap would be just shy of $160 million. And it also means that if, and that is always a big if, but if those dilutive securities get exercised, the number of shares outstanding will go up by about a third or 34%, which would then result in about a 25% ownership dilution. The pro forma ownership of the company would be predominantly by retail for about 2/3 of it, as well as some institutional ownership for about 15%. Eric Sprott's in there for about 12%, and insiders would own about 10% of the new company. On paper, the combined company will control roughly 10 million ounces of silver equivalent in the indicated category and 236 million ounces of silver equivalent in the inferred category. But again, that is across 3 different geological systems, and it's also inferred and indicated as well as its equivalent. So hopefully Gary and I can talk about that later on in the conversation as well. Now, together, the company will have about 17 million Canadian dollars in cash and a 4-man board, 2 from each side, and a bit of a changed plan as well, which I'm hoping to discuss later on. But for that to happen, I'll actually have to shut up already and Gary give you the word. But first of all, thank you for being here today.
Oh, you're welcome. Good to chat again.
Well, pleasure is mine. Gary, you're advocating for this merger. You're telling people to vote yes, but why should they? How does combining 2 companies with, again, geologically and geographically different assets make sense in this environment?
Yeah, it's, well, we're hoping that Summa Silver shareholders vote yes. Mm-hmm. Of course, we have a concurrent financing that was not necessarily required for the transaction, but we did close on 6.9 million, which is a sub-receipt, which was held in trust until the vote. So we're excited about it, and we're hoping that Summa shareholders and Silver47 shareholders will see the value in a larger, high-grade, premium silver-focused company in the U.S. So the Red Mountain project that Silver47 controls 100% remains the flagship, and it's the more advanced, larger resource base of the assets. But if you look at the combination it takes Silver47 from 168 million silver equivalent to 246 on a combined basis. So 246 million ounces silver EQ. I know some of that's indicated, most of that's inferred. And importantly, we go from about a 30%, like it was just like at Red Mountain, just about a 30% precious to base metal ratio to close to 60% precious to base metal ratio, because the Mogollon in New Mexico and the Hughes project in Nevada from Summa side are primarily silver and gold and good high grade. So I think on a combined basis, we maintain that sort of 330, 350 gram silver equivalent grades. And yeah, there's lots of other metals in there, but those are also valuable commodities. And yeah, just we use equivalent because we're dealing with quite a handful of metals. But we are using, conservative and tested recovery rates. So we're in the 70 to high 90s on the various metals on the metallurgical work that's been done. And I think we're using, fairly conservative metal prices in those equivalent calculations as well. So
multiple things to touch upon: metallurgy, EQ numbers, all stuff that we can get through. Are there any G&A synergies that could justify the merger, though? Like, what's the combined administrative spend going to be here of the proposed company?
Well, we've been running pretty lean and mean, both companies. I just think, there's we don't need two CFOs, so there's some attrition on the talent, but now we have more projects, so we're keeping all the geos that we have. So we've got a number of guys. We're going to stick around. I think, look, just a bigger company, we need to get out and tell the story and to multiple jurisdictions, and we're looking to secure some of that Department of Defense funding on the critical mineral side. So that's going to take a bit more work. So I think there's some synergies from an operational perspective. We've been using a lot of external consultants because Silver47 is a small head count. And then now we can start to ease those out and bring in and keep our own talent busy rather than using external consultants. So that's one cost savings there.
Mm. So are you going to have to spend more money on marketing and essentially lobbying? Is that what you're saying here?
Yeah, exactly. There's well, look, as a larger company, you've got to get out, tell the story. You can't sit back and expect people to find you. You've got to get out and make your story known to the investor community, and that takes capital and people to go out and tell the story.
What's fair G&A then in that case for a company of that size? I mean, 120 million market cap, again, that's proposed, forward looking and everything. But if the deal goes through, what would a fair G&A be for a company of this size?
Oh, well, I would say, somewhere in the neighborhood of 100, 150 grand a month is probably a reasonable number. We've been running super lean, more like 50 to 70 grand a month. And, that's going to grow and that's going to change. And, but still pretty lean. Like, the 15 million that we have sort of earmarked here as a pro forma company on the back of this merger, which is anticipated to close towards the end of July. We'll have $15 million to work with, and the bulk of those dollars will go in the ground for drilling and metallurgical work and technical work and stuff like that. So that's the main takeaway. That's the value driver for us is getting those holes drilled and really growing the resource that we have.
Having mentioned the technical work that you're going to do, talk to me about the technical team. Are there synergies with the technical team? And what I'm really looking for here, why I'm asking that, is because I'm thinking, is the team that you'll keep versed in all three of the different types of geologies, essentially, and geographies, right? Because it's Alaska and then the US as well, different spaces. So talk to me about the new technical team that you're going to form here.
Well, a couple of the guys, geologists that were employed by Summa Silver are based in the US. So it does make it easier for them to jump around, to Alaska and Nevada and New Mexico. It's easier for them because it is US. It's going to be US focused assets for the most part. Not so easy for the Canadians. It's still a bit of work to cross the border, for any length of time. So there's certainly some synergies there, but again, we've got more people. We don't have a huge team. We're probably, if you just look at the geos, we're probably 5 geos. I say five because there's some that are part-time consultants and that sort of thing. But four people that are full on. That's not a very big geo team. So we're still relying on some senior technical consultants to assist where needed. But as far as the projects that we have and the targets and the resource that we're working on, it's a good fit, a good manageable amount of headcount. Again, try and minimize the external consultants where you can, and want to keep that talent, and you want to keep the knowledge. Part of the bonus of having more in-house geologists is you keep that knowledge in-house, and you can grow as a company. Whereas if you use external consultants, you don't retain as much knowledge in-house. You get the job done, but you don't get that retention of knowledge.
Who's going to be CEO?
So Gallium McNamara will be CEO of the new Silver47. I'll take on the executive chairman role, which again will mean more political lobbying work, chasing down some of this DOE funding, and that's going to be my mission. And of course, and as a junior company, you're always looking for capital and attracting new investors to the name as we get bigger. And one of the ambitions we have is to get on the New York Stock Exchange. So we need to be a larger company, a larger market cap. And one of the, just back it up a little bit, one of the rationales for coming together is just getting bigger. Bigger is better in this business. And you can either grow through the drill bit, and that just takes time and more money, or you can do a drilling and M&A where you can, transact, and all of a sudden you're a bigger company. And that's what, we aim to do here. Larger companies attract more capital, greater liquidity, and more institutional names. Like you said earlier, we're still largely a retail story, and we hope to change that, balance that out a bit more. And we're looking to attract more institutional money that wants to play in silver. And we think a high grade silver name focused in the U.S. should garner some attention and perhaps some premium.
How was it determined who's going to be CEO? Was it a sword fight? How did you guys decide?
Yeah, that's usually the tough part of these mergers, right? It's
the sword
why
fight.
Aren't there more mergers? Yeah, and it's always a bit of a battle on the ego side, and of course, my asset's better than your asset. The market's not giving me the value of my pile of goodies versus your pile of goodies. So I find those are the two sticky points: is valuation and for me, I'm not. I want to make money for shareholders. I'm not necessarily need to be the CEO here. I do want to be involved because I have, I think, some value to add here as a geologist, and I've been in the capital markets for a long time now and have the ability to raise capital. And so I think just being part of something bigger is more attractive to me than necessarily being the CEO. So I was happy to bring Galen in as a young, hungry, energetic geologist CEO to take the helm as CEO here. So that was relatively easy because for me it wasn't a fight. I'm just happy to be part of something bigger. And then we just used the market, the market cap at the time when we started talking. The respective companies were about similar 40 plus million market cap when we started talking. So we thought, well, the market's supposed to be efficient. I could argue that I need a better premium. It worked out that actually we did get a bit of a premium in the sense of the percentage ratio of the deal, but we tried to use a fair assessment, no premium, just that market deal. That's how you get things done. No egos at the table, and market structure.
Who's going to make more money though? Who's going to have a higher paycheck here?
Well, ultimately, what I mean between the two guys?
Sure.
Probably the CEO. He's taken a load of the work.
Well, but are you taking a pay cut? I mean, going on the board from a CEO, are you going to be taking a pay cut essentially?
Well, I mean, it's kind of up to the comp committee discussion, right? I mean, I can make recommendations to the compensation committee, but those usually go through a process and review as independent guys to provide that recommendation to the board. So they have to run a process there. look at, I'm not here for a salary, a paycheck. I'm here for the 10 million shares that I have in the company, to have them be worth a lot more money than they are today.
Hmm. Well, that's a good point too, actually. And these questions, they might sound a little funny or whatever, and that's not necessarily how I'm intending them. But I do know that there could be frictions on the board level with the CEOs or whatever, like who owns more stock, who gets more money, so what I'm really getting at is how do you make this merger successful? Not only from it having, a yes vote when it comes down to voting or having the right permits and everything, but how do you make it successful from a cultural perspective? Because that can sometimes be a challenge, putting two teams together, two board members on each side and whatever. So what are kind of the best practices or that you would be using there?
Yeah, you're right. It is, there's a lot of personalities involved, and they may not all work out. Like, let's see, there's usually a transition period of 6 months, perhaps 12 months in these types of mergers. And there just may be some friction and personality issues between personnel and managers, and that just may be natural attrition on a transaction like this. So I think if you keep people focused on the prize, which is we want to build a large silver-focused company in the U.S., and have just people focused on that prize, and we're aligned. We're all shareholders here. That's one way to align interests, is ensuring people become shareholders of this company that are involved, so you don't have people that are working for the company that don't own any of the company. That's not alignment in my view. So you try and build that alignment with the goals, and we're all on the same train, heading to the same goal here of getting bigger quicker. And so you just try and push that agenda as much as we can, and get alignment with people that, if they don't want to be part of it, that's fine too. But we've got a mission here, and we want to get there quicker. So either you're on board or you're not on board, I guess, is the way I kind of look at it.
Is this going to trigger any change of control fees for you or anybody involved?
No, they've all been waived, so there's no. Well, there's one year fee paid to our current CFO, because he's no longer will be part of the merger. So Kevin Chan will step aside, but other than that, everybody's waived their change of control rights.
Yeah, that's fair. I did notice that one of your directors, Alex Stewart, he appears to be selling on SETI. He appears to be selling.
Oh, Alex Wallace. Alex Wallace is
Oh,
he's our VP exploration. Yeah, he did sell some stock. It was largely to cover a tax trigger on the RSUs that were granted to some management of Silver47. So he basically had a tax bill he had to cover. So he did that, and that was it.
Why I'm asking that is because I'm thinking, when you merge the company, and naturally some people who used to be reporting insiders own some stock, they would no longer be reporting insiders. What are they going to be doing with their stock? So I thought that's kind of what I'm thinking. The people who are going to be leaving, do they own large amounts of stock, or what are they going to be selling? What does that look like?
Yeah, well, right now I think there's only one guy that's leaving, which is our current CFO. He does own some stock. He doesn't own a large amount of stock. He also has some options that are in the money. So he's expressed interest in exercising those options, even though he's heading out the door. Yeah, I don't see any issues there. And again, people sell for various reasons, but it wasn't because they're out and they want to get rid of their paper. So I don't think there's any issues there.
It's not so much a directional. I'm not really looking for a direction in their selling. What I'm really looking for is there going to be enough liquidity to catch that paper? Because I think 27 million Summa receipts plus over 15 million broker paper could start hitting the market after September 15th if this closes. So how do you manage that? Well, first of all, can you make sure that it doesn't actually hit the market or at size? And also, if it did, how do you manage the impact?
Well, I mean, you manage the impact by getting out there and telling the story that it's a good opportunity. So if you look at even today, right now, on a pro forma basis, I think we're trading at, what's the number here? It's like 32, so call it round numbers, call it 30 cents ounce in the ground silver equivalent. That's our valuation net of net of proceeds, compared to a lot of our peers that are in that, 50 cents to $2 an ounce in the ground. So I think if you're a value investor, you probably want to look at opportunities, perhaps on weakness, due to the fact that we do have a lot of free trading paper hitting the market. We've got a merger, which will all be free trading into Silver47. So, we try and do our best to get out and tell the story and explain to people the opportunity here. We have a large resource in the U.S., high grade, that we think is undervalued relative to our peers. And obviously, we're going to be drilling that and looking to grow the resources with the healthy treasury that we have. So boots on the ground and lots of drilling to grow that resource. We think that should resonate with investors, especially that we're seeing, if you look what happened in the last several weeks, we've seen a nice push in silver. We've had a nice move in our share price, like you say, up to 98 cents, which is a record for the company in this short time as being a public company. So just getting out and making potential investors aware of the opportunity. That's the best you can do as far as mitigation. If there's large institutions that want, large blocks of stock, we could certainly try and help facilitate block crosses. But, if people want to sell, they want to sell. And, we have traded a lot of stock. I haven't looked recently, but the last time I looked, it was around 38 million shares in 7 months of trading as a company, with only now 70 million shares out. So basically half the company's float is traded since we were a public company. So that says something about liquidity, I would say. We'll see how it comes out. The way we did the financing, though, it's a bit of a staged. We don't get all that stock hitting the market on one day. That's actually staged over about a month period. And of course, the transaction at the end of July is what will all be free trading once we get the approvals.
Yeah.
So we're hoping that people see the vision and the long-term, nature of a mining exploration development story. It just takes time to unlock that.
Well, the comparisons that you make here, so Agenta, BlackRock, Dolly Varden, and I suppose without providing comments to their assets, their EQ numbers are made up of give or take 50% silver alone. So that is a bit of a difference with you. If my calculations are correct, like the new combined company, if it goes through 71.5 million ounces of silver, total would be about 246. So that's about 30%, give or take, just rough calculations here. How do you close that valuation gap to go closer to what, a primary silver asset, for example, might be getting in terms of a premium? What are the exact steps that you have to take to close that valuation gap?
Well, I don't know if there are too many primary silver names to use in that metric. And I think most people know it's only 27% of the world silver mines are primary silver. So yep. I'd like to know of one that's available to compare that's not in a major's hands. So if you look at all our comps we're using, like a BlackRock, Agenta, Outcrop, Dolly Varden, etc., they're all using silver equivalent. Why? Because it's not pure silver. It's silver gold. It's silver plus whatever its economic commodities are using. We just so happen to have silver, gold, zinc, lead, copper, and soon to be hopefully antimony and gallium if we can get that network done. Mm-hmm. So yeah, happy to talk more on the silver equivalent stuff, but I think we have to compare what other people are using as equivalents. It's hard to compare. If you want to just compare apples to apples, that's one thing, but then you're discounting the gold and other economic commodities. So I don't think that's fair either. And I'll make the case for polymetallic mines over a single commodity mine any day, because what happens if you're running a pure silver mine and the price of silver drops, you're pretty much out of business. Whereas if you're running a polymetallic mine and the silver drops, okay, well then maybe zinc or lead or one other commodity holds the line, if you will, from an operational revenue generating perspective. They can actually help stabilize and normalize your production profile. So there's actually a lot of benefits in polymetallics, and I think some people miss that when they get laser focused on one commodity. Oh, I just want gold, so I'm not interested in a polymetallic story. I think personally that's not how I look at it.
Most of the world's production of silver does come from as a secondary supply essentially to the mine. So what I said there was not necessarily a dig on polymetallic mines. I was mostly thinking about, do they, like someone like Dolly Varden, I think is more than 50% silver, if I'm not mistaken. I don't know them too intimately though. So they get some sort of a premium because of that, maybe because it is the closest you're going to get to silver exposure. How do you go to that? How do you go to having the same, not premium, but the same valuation that they get? How do you close the gap between you and them?
Well, again, I think it's getting out there and telling the story. I'd say one thing that Dolly Varden has done well is has been out in front of investors a lot. So that it's a well-known name. I think anybody that's in the silver space heard about Dolly Varden Silver. So they do a good job at marketing and getting out there and doing that work. So yeah, it's just a matter of, I mean, look, at Silver47 is a new name. The asset that we acquired, the Red Mountain project, was in an Australian company. I don't think they did such a great job in marketing that story in North America and in Europe, perhaps.
Mm-hmm.
So the asset's a bit of an unknown, and the company is a brand new company. So I think, we're just freshly on the scene, not even a year now, in as a public company. So it's awareness and getting out there and I think as people start to learn about the opportunity, they'll see the value potential here, and it's a big play, and we think we're still early in the project's history from a development perspective.
Could it be a stage thing too, though? I mean, it's a BlackRock, Argenta, Dolly Varden. I think they're more advanced than Red Mountain, and definitely more advanced than Summa Silver's assets. If you look at them, so could it be so that the market is waiting for you to get to that PEA for Red Mountain or something like that? Do you think that might help with the valuation?
Well, I certainly think it will help with the valuation because there's certain funds that perhaps are looking for that, that's a tick the box. They're not quite, maybe there's funds that don't want to play into the exploration space. And when you get to that PEA level, then yeah, you're one step up from just a pure exploration play. So there's certainly some re-rate potential on that, and that is one of our short-term goals. In fact, our mission this year is to drill as much as we can at Red Mountain to come up with a restated resource towards the end of the year, early 26. And we're hopeful that there's enough success at the drill bit and enough expansion that would give us enough material for a PEA. And if you look at what it takes for like a 10-year mine life at 2,500 ton a day, say, which is a fair size operation, that's like 18 million tons, and we're 15.6 million tons at 336 silver equivalent grades. So I think we have the grade on an equivalent basis. We think there's room to improve that grade, and of course, we're focusing more on the precious metal part of the system, and then adding in some critical minerals. We think there's room to improve on not only the precious metal ratio, but critical minerals, and just ultimately the value of the metal in the ground there. But we do want to see this project move into more an advanced stage as soon as we can, have visibility on enough material for that PEA next step, if you will.
Let's talk more specifically about that. When do you think that is? What's as soon as possible?
Well, I mean, we're looking at this season. So we just launched our initial 4,000-meter drill campaign. Assuming that the voters support the Summa Silver47 merger, there's another tranche of capital that would allow us to essentially double our budget there, so we could see somewhere in the neighborhood of 8,000 meters perhaps this season. And our sort of back of the envelope estimate suggests if we can get to that 20 million ton mark, maintaining those grades or better, we think that's enough material to kind of move it into that next stage PEA. So it's just, we know the zones, both the Dry Creek and West Tundra flats are the two main zones at Red Mountain. Both of those seem to be open for expansion in multiple directions. So that's going to come through, drilling and that's the goal this summer. That's what we're doing right now, is expanding on the known. And there's also lots of other targets that we're doing sort of pre-drill workup to try and whittle down a few of these other targets on the project to see if we can pull some new discoveries. Because if you can pull another one of these 10, 20 million ton zones into the game, then that's all of a sudden becomes very interesting, doesn't it? And we know that these VMS type deposits tend to form in clusters. So there's likely more around here. It's just a matter of flushing them out and, doing the work to get them into a point where, you can put a resource on them.
How long does that take? Is it one season, two, three? How many seasons do you think it's going to take before?
Yeah, I mean, I think with this season of drilling, the goal would be to get a new stated resource here on the back of this season's drilling. Like we're not far off here. I think we'll see what comes of that. That's going to be obviously drilling success based. If it goes well, yeah, we could make that happen on this season. But it's hard to forecast what's going on subsurface until you actually drill it. So we're optimistic that that'll come to light here with the balance of the year drilling, and yeah, time will tell.
Subject to change, though, I suppose as well, because I think you'd expected a PEA sooner on Red Mountain. You changed your opinion, and you could change your opinion more, I suppose, if you make a discovery. Is that right? Another discovery. I mean.
No, I don't think so. I mean, what we're looking for is just enough material to the back of the envelope. We think we can make economics on, right? It's still going to be on an inferred. Most of our resource is inferred. So to move it up the development curve, you need to do more drilling and more density drilling. So get into that measured indicated category. And then obviously when you're ready to build something, you can do more work on it to get into the reserve category, the proven probable reserve category. And that's just all a function of more work and more detailed work. And you just get honed in on, on the prize, if you will. We're still looking, for those discoveries, and we're looking to see how big this thing is. So we're taking some big steps here, and we think there's a lot of material to put into category, and it's just going to take more drilling. I mean, right now we have one drill, so we can only do so much with one drill. Doing what we can with what we have, and we're hoping to grow and change that, and maybe perhaps next season we're talking multiple drills, and but that's sort of Red Mountain going into end of the year. Hopefully, well, put it this way, we're pretty sure it's going to be a new resource statement in early next year. We'll see what those numbers look like, and that'll determine whether we're moving into PEA or we need another season of drilling. So we're trying to be optimistic in that it could work in our favor that we have enough and away we go, or it could mean that we need another season of drilling. And you don't really know until you get that behind you. But and then come the fall months, we'll likely be shifting gears into either Nevada or New Mexico to work those one of those projects. I don't think we're in a position quite yet to perhaps work all of these projects at one time, but there's a good seasonality balance here between Alaska and either Nevada or New Mexico. So one of those will see a budget over the winter months, continue to push one of those projects forward, and again, just advance them along the curve. And we see visibility for 100 million ounces plus on each one of those targets. So you can wave your arms, I guess, that there's lots of growth in front of us, but that's not going to come easy. And that's, again, the part of the rationale for the merger is that it just takes so long to drill these things out. And when you can combine forces with other assets, you can just start to add ounces to the books sooner.
Well, I am a bit of a cowboy, so I do like a bit of arm waving myself. But how many financings are we talking about though before PA? Like, is this a one more financing thing, or is it a multiple more financings?
Well, I hope this could be it. I mean, again, you don't 100% know the answer to that, but we're going to try and do our best to mitigate dilution to shareholders, since I am a large shareholder. And obviously doing our work in the market to whatever our next financing is, and hopefully on the back of good results, that it's at a much higher level than we've done just recently. So I mean, that's a tough question. You try and mitigate dilution the best you can, but we're still exploration. We're ways away from cash flowing, but it is a focus for us to move this thing into a PEA as soon as we think we have enough material. And of course, we'll work with our independent consultants and QPs on what that number is, and some engineers we're starting to talk to. What is that number that we need to make economics here? And yeah, we'll do the best we can to push that envelope because we want to get there sooner than later and try and minimize shareholder dilution along the path.
When's the first news release from Red Mountain going to drop this year?
Yeah, good question. We're just starting to drill now. I don't have a feel for the season's assay turnarounds yet. We'll know when the first assays come in, but I would suspect sometime perhaps July, mid to late July, just as an estimate. Given last year, I mean, early in the season, it was 3-4 week turnaround. End of the season was 5-6 week turnaround. So, yeah, and I think there's lots of companies like ours out there drilling and putting samples into the lab. But so we'll have to see on that. But I don't know if you heard of the photon technique, but it's a fairly new analytical procedure that's actually working quite well for folks. We're starting to take a look at that. The advantage there is the turnaround times for results is much quicker. So that may be an option that may give the traditional labs some competitive pressure.
I know VMSs don't necessarily lend too well to visual assays, but is that something you're typically for or against? Like, are you thinking you'd announce any visual assays or photos before the assays, or are you just waiting for assays?
Yeah, that's always a tricky one. I mean, one good thing about VMS is if you're in massive sulfide and you've got galena and sphalerate, it's hard to predict the actual grade there, but you're going to get grade if you've got massive sulfide here. We know what runs just based on previous core that's been drilled, and so we have a pretty good eye for it. So you kind of know when you're in it. I don't know, giving pictures, it's just a bit of a teaser, isn't it? And I don't think anybody is smart enough to give you visual estimates on grade because that's a dangerous game.
Well, personal opinion, you didn't ask, but I'll give it to you anyways. I don't like visual assays. I'd rather you didn't. But I mean, different things work for different deposits, I suppose, and different strategies. You do also have locked cycle tests pending, if I'm not mistaken. What recoveries are you hoping for, and what do you think is realistic for these type of systems?
Well, that's what the wild card for us is on the critical minerals, antimony and gallium. Those are two elements that have been price-wise have gone ballistic over the last year, given that China has banned the export of antimony, gallium, and germanium and other elements. We know that we've got significant quantities of antimony and gallium in the VMS system. What we don't know is what kind of recoveries can we anticipate. So we're going to do that work this year, and we're working with some advisors on that. What kind of metallurgical work studies do we need to do? There's been a fair amount of met work done on the precious and base metals, and we have those numbers ranging from 70 to 90% already that we're using in our equivalent calculation and in our resource estimate. We just don't know about the critical minerals. So that's additional work we want to do, not only on the precious and base metals, and some additional work on those critical minerals because they're not included in our resource, and perhaps they should be if we think we can get reasonable recoveries from some test work. So that's all kind of ongoing work that we're planning to do this year as well, which will feed into the resource statement and perhaps into the PEA if we can get enough material behind us.
So you're essentially also running tests for antimony and gallium, if I'm not mistaken. I'd say that's a bit of a wild card. I mean, it's kind of a new thing. I mean, those are not new minerals or whatever, but what are you thinking for recoveries there?
Well, I have no idea, to be honest. But even if it was 50% recovery, that's worth something. So we just don't know. I don't want to speculate on it, but I'm just thinking if only getting half of those elements, that's something. It's not nothing. And right now it's zero. But I think there's value add to be added there as we do that work and try to understand it. And what's interesting is if you look back to the older early days on this project, they never analyzed for those elements. They were just looking for base metals and or precious metals in some cases. So they didn't have the old analysis weren't done. So yeah, we picked that up when we did a review of the whole project, and what else do we have besides silver, gold, zinc, copper, lead, and we started to identify a number of others. And there's a few more we don't need to get into, but yeah, there is some tin actually that's interesting. It's on the critical mineral list as well. More on the western side targets that seem to have more of a SEDEX affinity than the main VMS. But it's not uncommon to see tin and VMS SEDEX deposits either. But that's also a value if you can get significant concentrations of it. So there's lots of value add sort of, yeah. They're just supplemental. They're not the main driver. Again, our focus is going to be on the precious metal side of it.
Do you have a comp though? Is anybody making money off of antimony and gallium from a VMS deposit that you can compare to this?
Well, what's interesting about that is that historically and up until recently, most of the smelters would just take those in as byproducts, and they would just keep them, and nobody said much about them because they weren't traditionally worth a lot as a byproduct because of their small concentrations. But when you're pushing $50,000 a ton now for antimony, that's worth something. There's some value there. And the U.S. needs it. The West needs those commodities. So yeah, traditionally it hasn't been an issue, or it hasn't really been a value driver for people to look at so much. This has only changed since this whole supply chain issue that we've experienced over the last, I don't know, really since COVID, I think, where now we don't have these metals and commodities that we need to operate and whether it's industrial complex or military complex, AI, all these things that need these critical minerals. And now we don't have them, so they become more valuable.
Well, I was good.
So yeah.
Yeah. No, go ahead.
I was going to say we won't know until we do that work on them, but yeah, like I said, mostly the refiners capture those values, and now it's our turn to see some value come out of them.
Well, it'd be good to talk after you have those met results as well, because that's going to get us into talking about how many circuits and then how are you going to actually recover it from a CapEx perspective and everything. Again, too preliminary to talk about it now. But I was Googling stuff about metallurgy and VMS's antimony, stuff like that. And I found a study that looked into the environmental geochemistry at Red Mountain specifically, and they call it remarkable environmental footprint of natural acid generation. And that's actually a direct quote. And that's they're talking about the bare outcrops that are, as reactive essentially. So talk to me a little bit about that. How would that influence your operations, and specifically the waste rock and low grade stockpiles from, again, potential future mining here that would presumably generate even more acidity? I mean, is it that different of an environment there in terms of acidity than other places and other VMSs, or what is this that I've found?
Yeah, I mean, they're naturally occurring sulfides, right? So they're pyrite dominantly that, in that case, some cases they stick out of the ground, and the rainwater hits them and changes the rainwater acidity. So it becomes sort of acidic type waters. That's just a natural occurrence that happens. I mean, as from a mining operation, you've got to mitigate that through perhaps blending with more limestone, so try and neutralize the acid is one solution, or at least the acid potential there. The other solution is perhaps putting those sulfide waste rocks once you pulled the metals out of them, and you're still left with a pyrite solid that as a waste. You could put that back underground. So there's lots of ways to mitigate that. Future acid mine drainage potential. But we're not talking, billions of tons here. We're talking tens of millions of tons of material. I mean, we're talking, if we're lucky, we get to 20 million tons. And then you're talking maybe another 20, 30, 40, 50 million tons for the next generation of mines. So we're, on a best case, we're going to do some arm waving. Maybe there's 100 million tons to mine here over the next 100 years. That's not a lot of material in the scale and scope of mining operations. And again, there's ways to mitigate those. And yeah, you always try and use the best practices to mitigate any future environmental concerns, whether it's acid mine drainage or environmental degradation. So that's an engineering solution to work through in your mine plan and your mine closure plan. You've got to have a pretty solid plan to deal with that even before you start mining. So that will come as we move down that development curve and start doing more engineering and look at potential sensitive areas and again how do we mitigate these kinds of risks as you get into that development scenario.
Well, obviously, everyone comes to these interviews to hear my 75 IQ thinking here. So employing that here a little bit, when I read more acid, I'm thinking more permitting. Is that fair? Would you have to go through more permitting steps or something like that?
Well, I think it comes down to your environmental assessment, the work that you've done, and it'll be up to the state and to review and approve those, or perhaps recommend some changes to that. That's, I think, getting ahead of ourselves on this. First steps first is to get to a resource scale and scope and grade that you think you can make economics on, and then you wrestle down, the mineability and those environmental things you have to wrestle down. But I will say one thing, working in the state of Alaska is very pro mining with the state. We're on state managed lands. So we do have strong support from the state to develop something here, and obviously we want to do it in a responsible manner for sure. So that'll come. I think there's ways to mitigate those. I don't see any showstoppers at this point.
Well, good. Again, something that we can discuss at a certain point more in depth as well. Talk to me a little bit more about hydrothermal zoning here, because it looks like massive sulfide lenses sit across at least two of the thrust panels that you've provided in that on that graphic when you announced your program here. Could that be a challenge for grade continuity between Dry Creek and West Tundra, or how do you see that?
West Tundra, yeah, there's some complexity there. We don't quite understand that yet, and we have the geos are working on that to try and unlock that potential. There seems to be some post mineral deposition displacement with some faulting that's happened since deposition. So we're trying to understand that, and we did a big review of all the geophysical surveys we've seen, and we have a really interesting marker that's actually more of a graphitic layer that actually stands out quite well on the geophysics as, carbonaceous material, and graphite is quite conductive. So they stand out well on the geophysics, and we think that those could be good markers for us, because in some cases we see the sulfide horizon within that or just below that carbon-rich horizon. So we're going to be testing that this year to see if that's the case, and that obviously you want to see some sort of marker that can give you some confidence to find more of these things. So that's one of the pieces of the puzzle we're trying to sort out this year. There's some evidence that even the West Tundra Flats has been offset to the east. We have to get a hole out there to test that, but that could open up a whole nother block for us that's undercover, not visible at surface. Yeah, and we're not sure whether they connect. They appear to be on the Dry Creek and West Tundra seem to be on opposite ends of a fold limb, fairly open fold. But are they actually on the same stratigraphic horizon? That's something that we're trying to understand as well. Where within the pile do they sit? Were they on the upper or lower? If you just drill deeper at West Tundra, would you get into the Dry Creek section? Those kind of things we have questions about ourselves. How do they connect? Or do they connect at depth? And try and get a better feel for that stratigraphic horizon when these things form. You kind of want to back it out. You know what you have today. You try and back it out to when these things were pristine deposits, and that might help understand kind of where do you go next and that sort of thing. So that's again more geological technical work that's ongoing this year, and hopefully have some better answers for you after we've had a season of boots on the ground and drilling there.
Well, it's not like I understand the answers in the first place. I'm just reading the questions off a piece of paper anyways. So I'm hoping people watching them understand at least. But jokes aside, essentially what is coming down to here, what I'm taking from you is that this round of drilling is also going to help you better understand the structural controls so that you can target better for next drill programs. Is that right?
Yeah, well, not just of drilling for sure, but also just the field mapping and geology work that we're doing.
Okay.
Like they do, some of these zones do stick out of the ground, but the question is, where does it go? Is there another one somewhere that's undercover that we don't see? That sort of thing. So yeah, we're trying to see if we can tag into another one of these zones. I mean, obviously, it'd be good to find another 10 million tons close to surface or at surface somewhere here. And given the number of showings and gosens that we see on the property, I'm pretty optimistic that that we will as we continue to work on this project.
Well, what does that mean? Because this is the way you talk about Red Mountain. We haven't talked about Summa's projects. I guess we'll do just another interview on those projects alone because I know you don't have too much time here today for me. But how is the focus going to be split here, both from the perspective of timing, but also capital? How much money goes to Red Mountain versus the other projects?
Yeah, well, I can tell you that even now the team is primarily focused on Red Mountain and collectively here. It is the most advanced stage project. It's getting most of the attention until such time as the fall hits us where, okay, we need to wind down operations at Red Mountain. Once that happens, and we'll know that because the winter will be pushing us out, making it more difficult to do what we want to do. And then we'll be shifting gears into the lower 48 project. So that's the plan. The bulk of the budget will go here at Red Mountain, and then we'll see how it plays out for us into the fall winter. But that's the game plan. And like I said, probably one of the Summa's assets, either the Hughes project in Nevada or Mogollon in New Mexico. I don't think we can do both. But I mean, we'll see, right? And maybe we get a big window of silver interest and silver starts ripping over 40 and all of a sudden there's tons of money flowing back into space and our stock is through the roof. And one can hope and dream, I guess. But other than that, we just keep at it and get drilling, get busy and see what we can come up with here this summer, fall at Red Mountain.
An explorer without dreams is just a hiker, in my opinion, anyways. So you do have dreams. Gary, I asked you a similar question during our previous interview on Silver 47 low, but I suppose it might have changed now a little bit. So I'll ask it again. What's the business model for the combined venture? Explorer, sell down the road asset by asset, or build a bigger company, build a land bank, and then have it taken over during a bull run? Or like, what are you building here?
The end game, I mean, I'd love to see some production from one of these or more of these assets. I think you can never count on a getting taken over. I think that's a hard game to play. I think you just look for good assets, good jurisdictions, high grade, and you build that as fast and as long as you can. And look at I'd love to build this thing. We set out a pretty ambitious goal originally. We'd like to see 1 billion ounces of silver equivalent. And you could knock on, it's not 1 billion ounces of silver. Well, if you have 1 billion ounces of silver equivalent, you're going to have a lot of silver in there. So we're gonna be a silver focused company, and we're not hung up on pure silver plays. We're going to just get a lot of silver in the story and focus on that. And again, focus on the grade, focus on quality assets and good jurisdictions, and build them up and see where that takes us. And obviously, ultimately, we want to make money for our shareholders, number one.
Last time I also asked you, when you talk about M&A, is that M or is it A? And are you the buyer or are you the seller? Are those things still open, or do you feel like the company is fine as well, assuming that the deal goes through? If the deal goes through, are you happy with the size of the company, or would you be looking for more M&A down the road as well?
No, I'm not happy with the size of the company, is why we're doing this merger in the first place. We need to get bigger as a company. And we are always looking, we'll continue to look for great opportunities and like-minded people. Because again, remember I said it's the people that trying to get these egos out of the way and make deals happen, and then having the assets that are reasonably complementary to the story. And yeah, we want to grow mergers, acquisitions, and through the drill bit. It's going to be a combination of those things, and we'll look for the right opportunities as they present themselves.
What am I forgetting to ask you here at the end? What do you think we should be talking about, but I failed to bring up?
Well, I think we covered a lot of ground in a short period here. Yeah, maybe just to remind the viewers, if they want more information, they can go to silver47.ca and have a look there. And happy to chat anytime if somebody has any questions.
What are you not happy to chat about? What keeps you up at night? Like, what's the most annoying question, I suppose, that when you talk to the people who actually know what they're doing, what are they asking you that still kind of bugs you or keeps you up at night?
I don't know if anything keeps me up at night on that side. I think you just kind of roll with the punches. Yeah, I don't know. That's a good question. I don't have an answer for you.
I know you have to go now, so I'll just let you do that. But thank you so much for sitting down with me today, Gary.
Very welcome. Thank you.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. So unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."